Hello everyone. Today we discuss about budget and budgetary control. A budget is an accounting plan. It is a formal plan of action expressed in monetary term. It could be seen as a statement of experienced income and expenses under certain anticipated operating conditions. It is a qualified plan for future activities and quantitative blueprint for action. Every organization achieves its purposes by coordinating different activities. For the executions of goals, efficient planning of these activities is very important, and that is why the management has a crucial role to play in drawing out the plans for its business. Various activities within a company should be synchronized by the preparations of plans of actions for future periods. These comprehensive plans are usually referred to as budgets. Budgeting is a management device used for short term planning and control. It is not just accounting exercise. Now, meaning and definition of budget. According to CIMA, Chartered Institute of Management Accountants, UK, a budget is a plan qualified in monetary terms, prepared and approved prior to a defined period of time, usually showing planned income to the generated and expenditure to be incurred during the period and the capital to be employed to attain a given objective. In a view, a budget is a plan of action to achieve stated objectives based on predetermined series of related assumptions. A budget is a written plan covering projected activities of a firm for a definite time period. One can elicit the explicit characteristics of budget after observing the above definitions. They are: it is mainly forecasting and controlling device. It is prepared in advance before the actual operations of the company or project. It is in connections with definite future period. Before implementations, it is be approved by the management. It shows also capital to be employed during the period. Budgetary control. Budgetary control is a method of managing cost through preparations of budgets. Budgeting is thus only a part of the budgetary control. According to CIMA, budgetary control is the establishment of budgets relating to the responsibilities of executives of a policy and the continuous comparisons of the actual with the budgeted results, either to secure by individual actions the objective of the policy or to provide a basis for its revision. The main features of budgetary control are establishment of budgets for each purpose of the business, revisions of budget in view of the changes in conditions, comparisons of actual performance with the budget on a continuous basis, taking suitable remedial actions wherever necessary, analysis of variations of actual performance from that of the budgeted performance to know the reasons thereof. Objectives of budgetary control. Budgeting is a forward planning. It serves basically as a tool for management control. It is rather a pivot of any effective scheme of control. The objectives of budgeting may be summarized that I described right now. First, planning. Planning has been defined as the design of a desired future position for a entity, and it results or resets uh, on the belief that the future position can be attained by uninterpreted management action, detailed plans relating to production, sales, raw materials, requirement, labor needs, capital additions, etc., are drawn out by planning. Many problems estimated long before they arise, and solutions can be thought of through careful study. In short, budgeting forces the management to think ahead, to foresee and prepare for the anticipated conditions. Planning is a constant process since it requires constant revision with changing conditions. Coordinations, budgeting plays a significant role in establishing and maintaining coordination. Budgeting assets or assets managers in coordinating their efforts so that problems of the business are solved in harmony with the objectives of its division. Efficient planning and business contribute a lot in achieving the targets. Lack of coordinations in an organization is observed when a department head is permitted to enlarge the department on the specific needs of that department only. So, although such development may negatively affect other departments and alter their performances, thus, coordinate or coordinations is required to all vertical as well as historical or horizontal levels. Now, measurement of success. Budgets present a useful means of information managers how well they are performing in meeting targets they have previously helped to set. In many companies, there is a practice of rewarding employees on the basis of their accomplishment. Low budget target or promotions of a manager is linked to his budget success. Record success is determined by comparing the past performance with previous period's performance. Now, motivation. Budget is always considered a useful tool for encouraging managers to complete things in line with the business objectives. If individuals have intensively participated in the preparation of budget, it acts as a strong motivating force to achieve the goal. Now, communication. A budget serves as a means of communicating information within a firm. The standard budget copies are distributed to all management people, provide not only sufficient understanding and knowledge of the program and guidelines to be followed, but also give knowledge about the restriction to be adhered to. Now, control. Control is essential to make sure that plans and objectives laid down in the budget are being achieved. Control, when applied to budgeting as a systematics or systematized effort, is to keep the management informed of whether planned performance is being achieved or not. Now, advantage of budgetary control. In the light of above discussions, one can see that coordination and control help the planning. So, these are the advantages of budgetary control, but these tools offer many other advantages as follows. Now, I describe in details. This system provides basic policies for initiatives. It enables the management to perform business in the most professional manner because budgets are prepared to get the optimum use of resources and the objectives framed. It ensures teamwork and thus encourages the spirit of support and mutual understanding among the staff. It increases production efficiency, eliminates waste, and controls the cost. It shows the management where action is needed to remedy a position. Budgeting also aids in obtaining bank credit. It reviews the present situations and pinpoints the changes which are necessary. With its help, tasks such as life planning, coordinations, and control happen effectively and efficiently. It involves an advanced planning which is looked upon with support by many credit agencies as a marker of sound management. Now, limitations of budgetary control. It tends to bring about rigidity in operations which is harmful as budget estimates are quantitative expressions of all relevant data. There is a tendency to attach some sorts of rigidity or finality to them. It being expensive is beyond the capacity of small undertaking. The mechanism of budgeting system is a detailed process involving too much time and cost. Budgeting cannot take the positions of management, but it is only an instrument of management. The budget should be considered not as a master, but as a servant also. It is totally misconception to think that the introductions of budgeting alone is enough to ensure success and to security of future profits. It sometimes lead to produce conflicts among the managers as each of them tries to take credit to achieve the budget target. Simple preparations of budget will not ensure its proper implementations. If it is not implemented properly, it may lower morale. The installations and function of its budgetary control system is a costly affair as it requires employing the specialized staff and involves other expenditure which small companies may find difficult to incur. Now, essentials of effective budgeting. Support of top management. If the budget structure is to be made successful, the considerations by every member of the management not only is fully supported but also the impulsion and direction should also come from the top management. No control system can be effective unless the organization is convinced that the management considers the system to be important. Teamwork. This is an essential requirement. If the budgets are ready from the bottom up in a grassroots manner, the top managements must understand and give enthusiastic support to the system. In fact, it requires education and participations to all levels. The benefit of budgeting need to be sold at all. Realistic objectives. The budget figures should be realistic and represent logically attainable goals. The responsible executives should agree that the budget goals are responsible or reasonable and attainable. Excellent reporting system. Reports comparing budget and actual results should be promptly prepared and special attention focused on significant expectations, that is, figures that are significantly different from expected. An effective budgeting system also requires the presence of a proper feedback system. Now, structure of budget team. This team receives the forecast and targets of each department as well as periodic reports and confirms the final acceptable targets in form of master budget. The team also approves the departmental budgets, well defined business policies. All budgets reveals that the business policies formulated by the higher level management. In other words, budget should always be after taking into account the policies set for particular department or functions. But for this purpose, policies should be precise and clearly defined as well as free from any ambiguity. Now, integrations with standard costing system, where standard costing system is also used, it should be completely integrated with the budget program in respect of both budget preparation and variance analysis. Inspirational approach. All the employees or staff other than executives should be strongly and properly inspired towards budgeting system. Human beings are nature do not like any pressure, and they dislike or even rebel against anything forced upon them. Classification of budget. The extension of budget activity varies from farm to farm. In a smaller farm, there may be a sale forecast, a production budget, or a cash budget. Larger firms generally prepare a master budget. Budgets can be classified into different ways from different points of view. Now, the sales budget is an estimate of total sales which may be articulated in financial or quantitative term. It is normal forms the fundamental basis on which all other budgets are constructed. In practice, quantitative budget is prepared first, then it is translated into economic terms. While preparing the sales budget, the quantitative budget is generally the starting point in the operations of budgetary control because sales become more often than not the principal budget factor. The factor to be considered in forecasting sales. Now, production budget. The production budget is prepared on the basis of estimated productions for budget period. Usually, the production budget is based on the sales budget. At the time of preparing the budget, the production manager will consider the physical facilities like plant, power, factory space, materials, and labor available for the period. Production budget envisage the production program for achieving the sales target. The budget may be expressed in terms of quantities or money or both. Production may be computed as follows. So units to be produced equal to desired closing stock of finished goods plus budgeted sales minus beginning stock of finished goods. Now, production cost budget. This budget shows the estimated cost of productions. The production budget demonstrates the capacity of productions. These capacities of productions are expressed in terms of cost in production cost budget. The cost of production is shown in details in respect of managerial cost, labor cost, and factory overhead. Thus, production cost budget is based upon production budget, material cost budget, labor cost budget, and factory overhead. Now, raw material budget. Direct materials budget is prepared with an intentions to determine standard material cost per unit, and consequently it involves quantitative to be used and the rate per unit. This budget shows the estimated quantity all of the raw materials and components needed for production demanded by the production budget. Raw materials serves it supports the purchasing department in a scheduling the purchases. Requirement of raw materials is decided on the basis of production budget. It provides data for raw materials control, helps in deciding terms and conditions of purchase like credit purchase, cash purchase and payment period, etc. It should be noted that raw material budget generally deals with only the direct materials, whereas indirect materials and supplies are included in the overhead cost budget. Now, purchase budget strategies planning of purchases offers one of the most important areas of reduction cost in many concerns. This will consist of direct and indirect materials and services. The purchasing budget may be expressed in terms of quantity or money. The main purposes of this budget are: it designated cash requirement in respect of purchase to be made during budget period, and it is facilitates the purchasing department to plan its operations in time in respect of purchases so that long-term forward contract may be organized. Labor budget. Human resources are highly expensive item in the operations of an enterprise. Hence, like other factories or productions, the management should find out in advance personal requirements for various jobs in the enterprise. This budget may be classified into labor requirement budget and labor recruitment budget. The labor necessities in the various job categories such as unskilled, semi-skilled and supervisory are determined. With the help of all the head of the departments, the labor employment is made, keeping in view of requirement of the job and its qualifications, the degree of skill and experience required, and the rate of pay. Now, production overhead budget. The manufacturing overhead budget includes direct material, direct labor, and indirect expenses. The production overhead budget represents the estimate of all productions overhead, that is fixed, variable, semi-variable, to be incurred during the budget period. The reality that overhead include many different types of expenses creates considerable problems in fixed overhead, that is that which is to remain stable irrespective of vary in the volume of output. Apportions of manufacturing overhead to products manufactured semi-variable cost, that is those which are partly variable and partly fixed. Control of production overheads and variable overheads, that which is likely to vary with the output. The production overhead budget engages the preparations of overhead budget for each divisions of the factory, as it's desirable to have estimates of manufacturing overheads prepared by those overheads to have the responsibility for incurring them. Service department costs are projected and allocated to the production departments in the proportions of the service received by each departments. So that's the end of the video, my friends. And if you like my video, my humble request is please subscribe and share my channel. Thanks a lot for watching my videos.